Well, hello everyone and welcome to Momentum channel. Today we are going to be comparing four high quality, high dividend paying exchange traded funds for Canadian investors and putting them head to head, deciding which one is a better option for dividend investors. And at the end of the video, I'll also be sharing with you three Canadian stocks that I'm buying right now in the stock market. So let's get into it. The four picks for us to compare head to head are CDZ or iShares S&P Toronto Stock Exchange Canadian Dividend Aristocrats Index ETF. Next is 𝐋𝐈𝐿 iShares S&P Toronto Stock Exchange 60 Index ETF. 𝗖𝐋𝐈𝐖 or iShares S&P Toronto Stock Exchange Composite High Dividend Index ETF. And lastly, we have one product from Vanguard, VDY, Vanguard FTSE Canadian High Dividend Yield Index ETF. These four picks are going to be compared in a moment head to head. In terms of their closing price, the last closing price for these funds are shown here. For the most part, they are hovering between that $25 mark to about $42 mark in terms of the fund price. Looking at their additional fund information, of course, they are all traded on Toronto Stock Exchange, and all of them are focused on large growth businesses, with the exception of 𝗋𝐈𝐖, whereby your focus is on mid growth. The objectives for most of them are getting to that high dividend yield, many of which are focused on investing in Canadian dividend, high quality Canadian dividend paying stocks. Looking at the inception dates for these funds, the one that has been kind of established earliest of all actually is 𝗋𝐈𝐿. In fact, as you notice that its inception date goes back to 1999. The one that was established the latest, in fact, is VDY, that has its inception going back to the year 2012. In terms of the management expense ratio, the lowest fee here belongs to the option 𝗋𝐈𝐿 with a fee of only 0.18%. What this means is that if, let's say, you invest $100,000, the fee that would be charged as part of this fund is $18. Not too bad. The highest fee here belongs to the option that we have with CDZ at a fee of 0.66. Next, let's just take a look at their performance. First, we're going to take a look at their 1-year performance and see which one of them is doing better there. Judging by the color of this chart, you see the best performance 1 year belongs to iShares S&P Toronto Stock Exchange Composite High Dividend Index ETF with a total return of 13.3%. This, in fact, is for the 𝗋𝐈𝐿 iShares S&P Toronto Stock Exchange Composite High Dividend Index ETF that you saw it there. If we look at the 3-year return, you're going to see the returns are cumulatively showing better and growing, but in this case, VDY actually comes to the top. It's in the overall 3-year, showing a total return of 45.6. Now, if you go back to the 5-year cumulative return, we are seeing still the VDY is kind of doing better than the rest of the bunch with a total cumulative return of 61%. Now, if we go back as far as to the common inception date, which was late 2012, and since then, what was the best return? You're seeing still VDY comes to the top with a cumulative return of 145%, which is way better than the second pick there. In this case, the second pick being iShares S&P Toronto Stock Exchange 60 Index ETF with a cumulative return of 124% plus. The returns by different time periods are shown here. This last line is showing the return for the fund since their own inception date. Of course, this is different, but this is the annualized returns that are shown here based on their own respective inception dates. We're going to take a look at their additional fund data, such as their trailing 12 months yield, the dividend yield. Here, the best dividend yield actually belongs to 𝗋𝐈𝐿 with a 3.90% trailing 12 months. All of these funds do pay their dividends distributions on a monthly basis, with the only exception being here at 𝐿 which it does pay it on a quarterly basis. Number of holdings for these funds are also shown. For instance, VDY has 48 different stocks and holdings as part of it. And the larger number here belongs to CDZ with a total actually holdings of 93. We are going to take a look at some market data in terms of the market cap for these funds. We're looking at close to $1 billion for CDZ, $10 billion for 𝐿𝐋𝐈, $1.3 billion for 𝐿𝐋𝐈, and $1.2 billion for VDY. Lastly, we're going to take a look at the holdings, the top 3 holdings for each one of these funds. You're starting to see a number of similar holdings here. For CDZ, we are seeing Pembina Pipeline as the largest holding, followed by Keyera and Slate Grocery REIT. As for the 𝐿𝐋𝐈, we are seeing Royal Bank of Canada, Toronto Dominion Bank, and Enbridge in terms of the top 3 holdings. As for 𝐿𝐋𝐈, Enbridge, Bell Canada, and Royal Bank of Canada are the top 3. And lastly, for VDY, Royal Bank of Canada, Toronto Dominion Bank, and Enbridge are the top 3 holdings. In terms of the sector breakdown, you're noticing it here. For the most part, financial services actually, in fact, for all of them, is the top holding in terms of the weightage, followed by energy. Again, it's the second largest holding there. As for the third large sector breakdown, it differs. We have real estate, industrial services, telecommunications among our holdings, geographical in terms of the breakdown by sector, not geographical. Because if you look at the geographical, in fact, all of these are exposed to Canadian stocks, with some exception for 𝐿𝐋𝐈 and 𝐿𝐋𝐈. For 𝐿𝐋𝐈, we have about 1% exposure to the emerging market. And if we look at for 𝐿𝐋𝐈, we have about 3.5 or 3.6% exposure to emerging markets. Now, with that out of the way, let us take a look at quickly the 3 stocks that we are buying in the stock market this week. The first pick is Bank of Montreal, the ticker symbol BMO. It is also available for investors outside of Canada with similar tickers, BMO, through New York Stock Exchange in US dollars. BMO now had some misses recently as part of its latest announcements, quarterly announcements, and that really took a hit on the stock. That's why you notice how in the past 5 days, the stock really dropped extensively, almost by about 3% or so. But since then, it's starting to gradually recover. We've managed to add to our existing shares of BMO after that decline and picked up some more shares of BMO. The second pick that we are adding to our portfolio this week, and this is a new addition to our portfolio, is Bell Canada, the ticker symbol BCE. It's a telecommunications giant here in Canada, one of the major players. And if you look at the stock overall, in terms of the 52-week 1-year range, the lowest that the stock has hit was $61.42 and the highest $74.09. Current price is hovering a lot closer to its 52-week low. Its price to earnings ratio is currently at about 20, and it does pay a quarterly dividend, currently with a yield of 5.8%. It's a juicy, nice dividend by this business. And lastly, the third pick for us in Canadian stock to add to our portfolio this week, if you're adding more to our existing shares, is a Canadian bank, Toronto Dominion Bank, the ticker symbol TD. It is also available for investors outside of Canada on New York Stock Exchange with ticker symbol TD. TD is one of the major banks in Canada. As I mentioned, is also available in the US and has expansive reach and services. It does currently have a dividend yield of 4.2%. If you look at their price to earnings ratio for TD is at 10.7, and its last trading price of about $85 or so is hovering a lot closer to its 52-week low price of $77.27. The highest the stock has hit in the past 1 year was at $109.08. There you have it, folks. A quick look into our 3 Canadian stock picks for this week that we're adding to our portfolio. We also compared 4 high quality, high dividend paying exchange traded funds for Canadian investors. I hope you found this video beneficial and gained something of value from it. Do let us know in the comment section down below. Are you invested in any of these stocks or exchange traded funds that we talked about in this video? I would love to hear from you. If you enjoyed this video, don't forget to smash that like button and subscribe to our channel. Here on Momentum Finance, we post every week several videos about investing, including investing in dividend stocks, growth stocks, penny stocks. We also talk about investing in crypto and ways to reach financial freedom. Thank you, and I hope to see you next time.